Crypto just didn't dip, it got blindsided by a global macro shock. Japan fired the first shot, yield spiked, liquidity plug pulled, and the liquidity drained. And Bitcoin, like it always does, moved before the headlines even caught up. But here's the twist: nothing in Bitcoin's crypto macro world has changed. The fundamentals have not broken. So, in fact, this move basically just reset the board for 2026. And let me show you exactly what's going on. So, you are the smartest traders at the bar. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And of course, come on over to X and follow us on X where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. All right, what the heck's going on in the marketplace? We got a lot of information for you. Really, but just to recap, all right, we had the yen carry trade and why we dumped on December 1st. December actually came in a little bit bloody, but we did pick it. We did actually pick the points, right? We did say that 93,000 was going to be a heavy duty resistance and we could fall back down to 87,000. We actually dipped a little bit lower and we'll get into the short term, points in a little bit. But right now, let's just start with exactly the situation that we said that we could see in Bitcoin, where we had the traffic set up compared to the yen carry trade. We also call this the strategy trade. We didn't know what macro was going to do it, but so far the forecasting has been correct. Now it all depends on like how deep that we go, because we're not out of the woods yet, nowhere near it. Okay, now we got a lot of things that are happening, but let's just start off what actually caused the drop, because it wasn't ETFs, it wasn't retail panic, it wasn't anything inside of crypto. December 1st came in rough, like rough. It lined up perfectly with everything we forecast, though. So it was good to see the market actually agreed with us. That was very nice. Now, Bitcoin tapped resistance at 93,000 to the dollar and was rejected exactly the way we expected. It was a clean textbook reaction. Now, Bitcoin dropped 5% and the rest of crypto followed. Okay. But the real story was happening in Japan. All right. I'm going to take you over. I'm going to show you really like the background on this. Okay. So we can check it out. The main reason behind the crash was Japan. The Bank of Japan decision in December. It's now at 80%. Um, 25 basis point increase, 82% right now. Okay, so it's even gone higher. It was actually a 73% chance of the Bank of Japan raising rates on December 19th, and now it's up at 82%. Terrific. All right, so the single shift sent Japan's 2-year yield to 1.84, the highest since 2008. So, translation: Japanese markets went into extreme fear. But here's why it matters to you. For decades, traders have borrowed yen, trillions of yen, at near zero interest rates. They converted it into US dollars. They pumped it into US Treasury, tech, and yes, of course, crypto, the highest beta asset of them all. But guess what? Now it's reversed. This what they're doing is actually threatening, and when the threatening that whole system, right? So you're not going to be able to borrow yen cheaply anymore. So the whole yen carry trade that we highlighted, really spot on. It was actually, is unwinding right now as we speak. So when the Bank of Japan threatens the system, carry traders are forced to unwind. That means de-risking. That means selling crypto first, because they consider that to be the riskiest asset. This exact move happened in August of 2024 as well. So the question is, should we all be panicking, running around with our hair on fire? The answer is no. Nothing in the crypto world, nothing in the crypto fundamentals has changed. This is just pure macro turbulence. It's just trading. Equities dipped too. All right, equities dipped off of this. So when we say basically like we had the traffic stop, or we had this setup happening right now, we had two dips, we got one breakout. We got May versus December, we got minor symmetry here. Okay, this is how parabolic moves begin. But we don't know how deep we're going to go. Okay, it's not going to be a 1-2 punch here. We'd love it to be. Love it to be wrong, but I don't think that this is how it's going to unfold. All right. Now we know Bitcoin's walking the same path. We know that we got round two loading up. And we know that we don't want to miss it. We're going to have to trade this thing. But really, crypto is intact. Nothing has changed. Okay? And our 2026 thesis is still intact, which is that the cycle has extended and we're not in that 2.5 year bear market. That's our thesis. Okay? We may be right, we may be wrong. This is what we're thinking, and we'll trade it. Okay, we're not going to just stand in front of a freight train. All right, let's get into the 2 hour chart work. All right, because that's the I know you guys short-term traders, you're really interested in it. All right, so we said that 93 was going to be the wall of resistance. We hit it. We said that the 90,000 was a trigger point. I said I'm not moving this 91,000, but the trigger was like right here at 90,000. A break of that brought us down to 87. We actually broke deeper and went to the secondary target at 84. We had that target pinned down. Now the marketplace is starting to reverse. There's going to be heavy duty resistance at 88,000. Okay, nothing's cleared out yet. All right, so you can expect that we can bump up to that, hit into that, and actually come off a little bit. I suggest you get into our pro trading group because they'll have setups short term for longs and shorts. Okay, but right now all I'm seeing is really resistance is happening like right here at 88,182, and also if I go up a little bit higher, right at the 89,000. So this is the same kind of rectangle that we put up yesterday. It's still there. There's still resistance there. So if we could pound up into it and the resistance holds, which it looks like it's going to for the short term, we could actually come back down and test this bottom. Now, if this bottom goes, we got the all important 82,000, and I really thought that was going to be the first target that we'd have to look at to see how the market price action reacts. 82,000. Longer term, if it broke the 82,000 and it's heading to the 80,600, and then the main point at 78,241. So we got you covered here, all right? Like I said, all right, we have in our arsenal of looking at Bitcoin, we got a three-path scenario. And this is where the things get interesting for us and for the market itself. All right. So we have basically what we're considering, you got dollar cost averaging levels, right? But these are the three scenarios that we're seeing. I think scenario one is unlikely right now because there's too much. Now, all right, let's put it this way. Well, since this is a weekly chart, it isn't. It isn't out of the realm because I'm coming off of a 2 hour chart where right now we're waiting for basically Powell to say something, and with the rate cut odds moving up for the U.S. dollar around 86% right now. As long as we can hold the line, as long as we can hold the 80,600, there is a potential for this to have scenario one. But here's the scenarios. Sitting right now, we believe that Bitcoin is overall sitting in a reload zone, the exact place where new cycle setups form. From here, Bitcoin's got three paths. If we can reclaim 93,000 and hold above it, we get a turbo pop, okay? And that would confirm buyers absorbing the entire macro shock that we went through. Now, I think path two is more of a likely path. It's just my opinion. And of course, I'll change because I'm a trader. I don't, I have opinions, but I watch what the price action is telling me and I react off the price action. But for myself, I think we could get a retest of 78,000 before a liftoff. It would be normal, healthy, typical mid-cycle behavior. Now, path three is a maximum pain shakeout. And I'm telling you, that is there because we're dealing with these guys: BlackRock, State Street, Vanguard, and it goes back to the theme of them wanting to control everything. They want to control the rails. Okay, that's the most important thing. Think about like a train track. The rails control the direction of the train. No matter how powerful the train is, the rails control it. And that's what they're trying to do. They're trying to get control of the rails by shaking everybody out. They only want you dealing in Bitcoin in their ETFs. If you haven't noticed, all right, that's exactly what they want to do. So, if we look at scenario 3, we're looking at a maximum pain. Okay, that's not the chart I want. That's the chart I want right there. A wick to 69K, and then we could get a really quick reversal. The liquidity grab that destroys late bears and late bulls simultaneously. Okay, so that's the point. All right, so uh, it could get everybody down there. Another huge movement down, another huge liquidation event, like we saw on October 10th. All right. Automatic deleveraging, ADL, happening again down at this level. All right. So, but one thing is clear when we look at this chart, it's where setups are born. This is positioning time. It's not panic time. It's like get ready to trade this time. Okay, it's not going to be easy. We're not in an easy sector. I've gone over many times that you know the percentage of times Bitcoin is in an upward movement compared to chop and bloodbath. It's in bloodbath a lot more than it is in just making new highs, right? So that's just part of the game. Now we did pick the resistance really well. We nailed the timing on it, and now we're just we're just ready to trade the depth of the correction. So again, we have a three-path scenario. The shakeout hit, Bitcoin sits in a reload zone. The three paths are from here. Reclaim 93, and we get a turbo breakout upward towards 105. Retest 78 before the liftoff, which is, I think, that's my more likely scenario. Maximum pain, a $69,000 wick, where we get, again, automatic deleveraging, more pain, more complete fear, people just puking positions, and then a reversal upward. Okay, so one thing's clear. Again, this is where setups are born. So don't freeze. Don't freeze. Get your game plan together. If you need help, come into our pro group. You'll see how we position capital. All right? Now, whatever the scenario that happens, we just have to be mindful of this. Don't panic. Don't panic. They want you to panic. We are basically heading for the major fear zone, and we call it the Bitcoin shakeout zone, where fear will dominate all trading. But this is where bottoms are born. Smart money like iBit and all the others are not panicking. They're sitting there rubbing their hands together like that, if you can hear it, and going, can't wait with the best. What was his name? Burns, the guy who used to run the company on The Simpsons. Excellent, excellent. They're sitting there tapping their fingers together, really, really looking to grab as much coin as they possibly can. And as I said, smart money is not panicking. They're positioning. This is the leg where most will give up. It's when fear peaks and the trend will flip. Big, big. That's our opinion, okay? Everybody's entitled to an opinion, and that is our opinion. All right, so just one more time, I want to come over and make sure you understand what we're looking at here, what we're calling it, where the pattern becomes obvious. The two dips, the one breakout. Now, that would be a perfect scenario. We got May versus December, minor symmetry. This is exactly how the parabolic curve actually begins. Bitcoin's walking the same path. Round two is loading. We just don't know how deep we're going to go. That's why we said we have like these three scenarios, okay, that we're going to be, all our traders basically studying this, and they're getting ready to like work it, man. We're going to work it. That is for sure. We're going to trade the stuffing out of this. I'm telling you, we're going to trade the stuffing. Now, before we jump into Ethereum, let's zoom out because December is absolutely loaded, okay? Day one wasn't great, that's for sure. But the rest of the month, we got massive upside potential. We got massive, huge volatility potential. So here are the big catalysts for December. We got the Fed rate cut December 10th. I'm going to take you over right now, show you this chart right here, the CME Fed rate tool. Look at this, 87.4%. Now, but the cut isn't really the market mover. It's what Powell signals about 2026. That's what's going to be. Now, the new Fed chair, he's going to be pro cuts. So we got to get rid of this skunk, and we got to wait for the new guy to come. But you got to keep that in mind. The new Fed chair is going to be pro cuts. That is for sure. He's a Trump guy. So he's going to come in and he's going to be just cutting. So more quantitative easing. So that's the positive backdrop really for crypto liquidity. Now, the Bank of Japan. I just showed you this chart. The poly markets right now, they're saying 73, now 82% chance that the Bank of Japan hikes rates. It's happening right now. The market's unwinding, right? So the yen carry trade is under attack right now. But it's already been priced in right now. So, and I can tell you it's been priced in because dollar yen, actually euro, let's see, sterling yen is actually up off the lows. It's hitting 206. Now we got to watch sterling yen to see what happens. There's resistance at 206, 25, 206.30. If it pops through that and starts going back to 207, and we can say that, yeah, the market has digested this whole thing with the yen carry trade, okay? What's dollar yen right now? Where's that dog? 156. So that's also up off the lows. Dollar yen went down to 155, 154.65. 154.65, and now his rebound is up 150 pips. So again, we could start to say that maybe the market has digested this, maybe not fully, but they know it's coming. So therefore, you know what it is? It's, buy the rumor, sell the fact type of thing. Always. You got to write that down. In markets, man, I mean, if the news is out, okay, and the market reacted, don't expect anything to happen when it actually gets announced. Matter of fact, expect it to go the other way. Whichever way it should go, it's going to go the other way because it's already priced in. It's one of the hardest things that I had to learn as a young trader. Like, well, wait a second, the Bank of Japan, raised rates. The yen should increase, right? So I go short dollar yen only to get punched in the face. And then when start to realize like, hey, the market already knows that. That's old news. They don't care about that. So really just make sure that you write that down in your notebook, like whatever, and go back in time and look. Go look at, macro events and say, well, it should have done this and it did the opposite because the market already priced it in. Now, if it's a complete shock, then it's gonna react the way you think it's gonna react. Now, so we got the Bank of Japan, the poly market saying 82% chance. The decades-old yen carry trade, the backbone of global liquidity, could unwind further. That's a macro wild card for December. But really, I think it's already priced in, and we got quantitative easing also coming from the Fed. So that's good. So we got quantitative tightening ending last night at midnight. Okay. Now the Fed stops draining the liquidity. Okay. And a light quantitative easing is preparing to restart. So historically, quantitative easing, crypto tailwinds. That's for sure. Now, also, just on a side note, I mean, like, we got in Abu Dhabi, all right, December 11th to the 13th, we got some massive announcements that are coming out, major ecosystem catalyst. And Solana historically outperforms during breakpoint. So that's what's happening right now. And we got to keep an eye on that. So the bottom line is like really December is stacked. Now we monitor which direction these catalysts fire, and we trade the stuffing out of them. Doesn't matter, whatever direction these traded, this catalyst move, we're going to trade the stuffing out of them. All right, so let's move on over to good old Ethereum. You got to keep your eye on IBIT today. Should get a little bit of a rally. It's going to have some trouble at 50, although we don't trade stocks. But hey, maybe you want to take a flyer on it. All right. So anyway, we got Ethereum. All right. Don't forget about this. If you haven't seen the video on the Fusaka upgrade and what it's all about, I think it was 2 days ago. Go back and watch it. It's very, very important. Okay, L2s are no longer going to be able to just abuse Ethereum. They're not going to be able to do it. So that's an important upgrade that's happening. Now, if we come on over to Ethereum, we look itself, Ethereum has not lost its structure. Now, it followed Bitcoin, but like I said, it has not lost its structure. 2,600 held tight so far. That's a major point of support for Ethereum. Now, we had Ethereum Bitcoin is at a macro reversal zone. It's the same zone that flipped rotations in 2017, 2021, and 2024 pre-halving period. Ethereum is not leading yet. It is not. But it's quietly forming a base for a January rotation. There's so much stuff going on right now. Ethereum basically, again, in the passenger seat, but eventually, there are times that Ethereum outperforms Bitcoin. And we're expecting that to happen, 2026, early 2026, January, sometime in 2026, after all this stuff clears out. We got Bitcoin actually, getting solid again and building a base, or even happily pumping back up over 100. That would be quite interesting. But if we look at it, we got a wave 3 window that just opened in Ethereum. We've been talking about it for quite a while. Wave 1, the trend begins. Wave 2, total shakeout. Okay. Wave 3, parabolic move. Ethereum printed this 3 times before. Each time it exploded. Now it's flashing again. We can't miss this. We can't miss the zone. We can't miss the move. So we got to trade the stuffing out of it. So I'm telling you, come on over to our group, and we'll be also. I want to just mention something. Tomorrow I should have an update for the XRP army. We've been digging into XRP and we're trying to figure out like what's going on with XRP. We will be trading it pretty heavily soon in our pro group. And I got some news for you. I don't have all the information available, but tomorrow I'll bring that in. I didn't want to bring it into this video because it would be way too long. But tomorrow, we'll talk about it. So, Bitcoin dominance. Let's move over to Bitcoin dominance right now. And this is where it gets tricky. Because we said this with Bitcoin dominance. We got the rising, the ascending, broadening wedge that's been broken out. Now, it's very complicated because it may fall on a head fake, right? Bitcoin dominance may come off on a head fake, and that might trigger people thinking, oh, altcoin season. No, we're not at the levels of Bitcoin to actually to say that. Okay, we need Bitcoin actually higher. So what we're thinking is Bitcoin dominance can fall because there could be another sell-off, another ADL event in Bitcoin itself. But that's not and at that point it'd be a bloodbath. So there'd be no real reason to be looking at altcoins. But then we're expecting it to rally back hard again. Okay, so anybody that got fooled with the head fake on the downward movement, trying to buy bags of stable coins, are going to you're going to get punched in the face again. So it's just be patient with it. But right now, as it stands, dominance, got rejected at the 60 zone. Okay, now it's sitting right up at 59.53. It's still very, very high. So you can say that altcoin season right now and Ethereum are going to just lag. Bitcoin has to work through what's going on. This is the cycle rhythm. Bitcoin pumps, dominance then will stall. Ethereum catches, altcoins follow. So dominance compression is the spark. It always precedes alt season. Now, right now, we see it's collapsed out of its wedge, but it's taking its humble time moving, right? And if you look at where Bitcoin is, 87,000, we really need Bitcoin higher. We need higher Bitcoin, all right? That will spark Ethereum. So the price of Bitcoin, is everything, right? So we just got to basically make sure that we position ourselves for when the market turns. And we got to trade the downside too, because we said we got the 3 scenarios, right? So we got to pay attention to everything. All right. So if we look at altcoins, right, moving into the altcoin market. Hang on a second. Let me get the altcoin chart up for you so you can see this. With altcoins, you got altcoins versus Bitcoin, right? Every time the Fed turns the printer back on, the alts start to move. Why? Because Bitcoin starts breaking out and upward again. So again, it all comes down to global liquidity. Okay, and you just gotta remember now we got QT that just ended last night. So history doesn't really repeat itself; it rotates, and you gotta get positioned properly. You gotta really right now. This is the time to do the research. Okay, it's the time to do the research. So how do you get into this pro group that I keep talking about? Well, real simple. The link is in our description right in our YouTube. Right in the description here, you click this link, you'll be taken over to our completely free Pro Telegram community where we drop insane alpha trading opportunities every day for you in this group. Hey, if you want to go it alone, okay. Well, we got two outstanding brokers that we offer through our link. You get incredible discounts, like right now with WeX, low fees, fast execution. You get basically no fees for life right now. Bitcoin, BTCC, 500 US dollar giveaway. So you got a small account, $1,000, give you a 50% increase right there. Also, low fees, fast execution. Got a huge announcement that's coming up with one of these brokers. I can't say it right now. I really want to say it, but just stay tuned. You're going to really, really love it. Anyway, but what I suggest is that you join our pro trading community. Look, you commune with like-minded people. You make some friends. You can make some friends for life in there. And we only talk markets there. It's really cool. Great place to be. All right, let's move on over to good old altcoins themselves. Right now, as it stands, weak liquidity. Yep. Weak hands everywhere. But this is where smart money starts to look at the market. Now, we got a couple of scenarios here. All right, we're actually thinking we're going to get the pump, but we could get a dump. There's no doubt about it, okay? With the way things stand right now, as far as all the information and the new players that are in the marketplace, again, you wanted Wall Street, you got Wall Street. But really, the breakout clock is ticking. The crypto market cap just hit the 200 MA. Paul Tudor Jones said that's the most important moving average in all markets. He actually said one time, he said, "Hey, you want a master's degree in finance? Just watch the 200 MA." So we're hitting the 200 MA right now. The last time it did it, 116% pump upward, 83. Same coil, same trigger. Compression usually comes before detonation. This is where the big moves begin. Make sure you're not too late. Make sure you're on your toes. And again, tomorrow I will reintroduce some macro and XRP, and we're gathering the details right now. All right, so a final recap. Make sure that you come on over to X. Follow us on X where we talk about Bitcoin, crypto, all day, every day. So Japan gave us the shock global liquidity situation that we have. Okay, the carry trade has been cracked. Bitcoin reacted first and right from the level that we did forecast. Don't believe me? Go back and watch the videos. Nothing broke. Bitcoin is in a reload zone. Ethereum is starting to stabilize. Dominance really is, as I just, it's a tricky sword right now. It's a double-edged sword. Altcoins, including XRP, are forming some setups, and that's why we want to talk about them tomorrow. So this is where the long-term positions are built. Stay disciplined, stay strategic. Don't trade with your head not over it. And always watch the levels that we give you. They're pretty good. So remember, what do you got to do? Well, you got to think about joining our pro community. Matter of fact, you should have did it already. I mean, come on. What else do you have to do? Well, you have to do your own research. As you know, I am a trader. I am not a financial advisor. And as a short-term trader, what do you have to do? Well, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Stay safe, stay profitable, don't overtrade. Cheers.